Iran launched retaliatory missile and drone strikes into Israel this morning following Israel's attack on Iran's nuclear program.
Iran, as you said, Doug, is warning it could take aim at U.S. military bases and ships if they try to stop Iran's missiles and, quote, Tehran will burn.
What's up, everyone? Today I'm gonna show you about everything what happens in Iran-Israeli war.
President Trump does say he knew the attack was in the works, but
Hey everyone, welcome back to the Market Insights. Today's topic is serious and urgent. The escalating conflict between Israel and Iran and how it could shake the global stock markets. We're going to break down what's happening, how investors are reacting, and what you do to protect your investing. Or you can even grow your investments during such uncertain times. So let's jump right in. What's happened? Israel launched an attack to Iran called Rising Lion, which affected 100 from the nuclear sites of Iran's buildings. Not even with waiting, 150 missiles were launched back to Israel as of response. This isn't just another Middle East skirmish. It marks a direct war between two major regional powers, and it's happening in one of the world's most strategically important areas, the Persian Gulf, where a huge percentage of global oil is transported. Nevertheless, the market reacts almost immediately. Whenever geopolitical risk explodes, the first thing market do is shift into risk-off mode. The S&P 500 dropped initially with 1.1%. The Dow Jones fell over 770 points, and Nasdaq lost immediately 1.3% within hours of the news. But not every sector reacted that way. For example, defense companies like Lockheed Martin, Rheinmetall rised up. They soared for 3 to 5% as investors rushed into war stocks. Airline and travel stocks dropped sharply. Why? Higher oil prices means fuel cost, which hurt airline profit margin. People also canceled trips during uncertain times. Meanwhile, investors flocked to safe haven assets. Like always, when it's war, everyone is investing in gold. US dollar strengthened, the VIX spiked, signaling rising fears in markets. It's almost classic wartime behavior. Oil shock while everyone is watching the Strait of Hormuz. The Persian Gulf, especially the Strait of Hormuz, is the checkpoint for over 20% of the world's supply. If Iran blocks or disrupts it, oil prices could explode. Already Brent crude rose nearly 7% and VTI reached $73 per barrel just on fear of escalation. Let's break it down. If the war remains contained and the oil flows aren't disrupted, oil could hover around $80 to $90 per barrel. But if Iran blocks the Strait of Hormuz or bombs oil infrastructure in Saudi Arabia or the UAE, oil could spike to $120 to $150 per barrel. What happens next? Transportation, manufacturing, food production all face higher costs. That reignites inflation, which central banks were just starting to get under control. Consumer feels the pain and corporate earnings may fall. In short, oil shocks are global economic shocks. Central banks are in tight spot. The US Federal Reserve was already walking to a tightrope, balancing between high inflation and slowing growth. Now with oil surging, they are facing a dilemma. Cutting rates stimulate the economy but also flush inflation higher. Holding on raising rates could fight inflation but slow down the economy even more. A former Fed advisor recently said this was a major wild card that could derail our monetary policy planning for the rest of 2025.
on the edge as Israel-Iran tensions escalate. Israel has struck a major blow to Iran's energy infrastructure, 12 million cubic meters of gas per day. Now, South Power supplies nearly two-thirds of Iran's domestic gas, making this a critical hit to the country's energy backbone. Well, this is the first time that energy infrastructure has been directly targeted in the ongoing confrontation, signaling a dangerous new phase in the conflict. The fallout from the attack is already visible, both on the ground and in the economy. Shortly after the Phase 14 strike, a separate fire broke out at Iran's Fajr Jam gas plant, one of the largest in the country. Now, while now face potential disruptions, the impact is reverberating through global markets. On Friday, U.S. crude oil prices surged up to 13% intraday before settling near $73 per barrel.
For investors, that means uncertainty is back in play. Winners and losers. Let's look how different sectors are reacting and what that tells us. For example, energy and oil. Huge upsides. Oil companies like ExxonMobil and Chevron benefit from higher prices. Defense, aerospace, strong demand as governments boost military spending. That means Lockheed, Northrop, Rheinmetall will go straight up. Airlines and travels hit hard due to higher fuel costs and reduced travel demand. United Airlines down 4% almost immediately. Safe haven assets like gold, US Treasury bonds, Swiss franc or rally. This acts like a portfolio protection. Emerging markets. Countries like India and Turkey suffers due to higher import costs and currency pressure. Israeli stocks surprisingly resilient, with some indicates even gaining over the past year despite the risk. It shows how every crisis brings opportunities. If you're positioning correctly, volatility can actually work in your favor. 3 market scenarios going forward. Scenario A: short conflict, market rebounds. If this ends in a few days or weeks, with diplomacy, markets will likely recover fast, just like they did after past conflicts, like Trump tariffs. Oil might dip back below $80. Investor will refocus on earning growth and interest rates. Scenario B, for me personally, if tensions last over months, oil stays high, inflation stays sticky, stocks stagnates or decline. Central banks pause or slow rate cuts bad for growth stocks. Strait of Hormuz shuts down, which is really bad for us all, not just for the war. This is the worst case scenario ever could happen, which will impact all of us. Oil goes $120 per barrel, which means inflations go up. This will mean higher cost on everything, like transportations, which means everything will be skyrocket and economies slows down. Markets could drop 10 to 20% more in global sell-off. Stagflation risk emerges. Low growth plus high inflation. As an investor, always prepare for all these. What smart investors are doing now? First, diversify your portfolio. Don't be all in tech or growth stocks. Add some exposure to energy and defense. Add inflation hedges. Gold ETFs, treasury bonds, and commodities fund can help balance volatility. Focus on strong balance sheets. What that means? Companies with low debt and consistent cash flow will ride onto the storm better, like Apple. Stay globally diversified. European and Asian markets may get hit harder than the US or vice versa. Use ETFs to spread risks. Have cash or dry powder. Market dips are opportunities. Be ready to buy with fear when fear peaks. And remember, when Warren Buffett's quote, be fearful when others are greedy and greedy when others are fearful. And we have reached the final stage of the video. So let's break it down. So how will the Israel-Iran war affect all of us or the stock market? The short answer is already has, if you know where to look at it. And if the situation escalates, the impact could grow dramatically. It could mean market crash, which is the best thing that ever happened. Because when market crashes, after the market crash, everyone can make their money almost double. But as with every crisis in market history, there are winners, losers, and opportunities. Your job is to stay calm, stay informed, and position yourself smartly. Don't forget to like my content, subscribe, share, and comment. Thanks, and please write in the comments how you will do your portfolio for the next bull run.